This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now, let's take a look at the market trade as we wrap up the month of July. Good strength in the soy complex once again. Also seeing a bit of weakness in wheat and corn. Good strength in livestock to wrap things up, and energies as well. Plenty to discuss. Let's welcome in Kent Beadle with CHS Hedging. Kent, great to catch up with you again, sir. How are you?
I'm doing great, and I really appreciate you having me on the show today.
Well, Kent, thanks so much for the time. Let's dive right in. Overall, this entire week has been a really solid week for the grains and oil seeds. A lot of what feels like a weather risk premium, especially for soybeans and corn, being put back into this market trade. And again, to wrap up the week, soy complex fairly strong, a bit off the highs, but still a fairly strong way to wrap things up. As you take a look at the markets as a whole, does it feel like it's been a very strong kind of weather-led rally here this week?
Well, I think it has. I do have to say that the leadership in the soybean complex has actually fallen on the August contract, which is up over $2 just for the week. Now, the November contract hasn't been left behind. It is up about $1.50 for the week, and clearly we're putting some weather premium in. But we're also going into first notice day, and the cash soybean market is still indicating that things are quite tight. We have a very sizable inverse between August and September soybeans. We have really nothing registered for delivery against that August contract. And it just suggests that, things are pretty tight on the soybean balance sheet, maybe even a little tighter than what the USDA has been telling us, and of course they're going to give us a new data here in a couple of weeks.
Well, and you mentioned that August contract going into delivery. Let's stay focused on this soy complex here a little bit. We see that strength there, but you look out, we're going to, start going to September, and then obviously the November new crop contract. As you mentioned, though, a little bit of a discount here to August. I mean, do you think with continued weather risk and this heat ridge setting up, we could see some of what we've seen in this August contract roll to September and maybe November here as we move into August?
Well, I think so. It's going to be interesting to see whether or not the inverse gets large enough to where somebody might try to deliver against the August and then maybe take those receipts back against the September. Sometimes those sorts of games are played. We wouldn't be this way if cash markets weren't extraordinarily tight and if it wasn't difficult for end users to buy soybeans. Now, most of your audience is actually selling soybeans, even old crop beans, against the November contract. The spreads are really not necessarily impacting the cash. The August is not impacting the cash. But typically what happens is when you have a really tight situation and you have August and September gaining on November at this time of the year, it tells you that there's usually some pushes that can be had out there if you've still got some old crop beans to sell.
Kent, as well, the soy product market has been strong. Meal has been really on fire here this week. Bean oil as well has found some strength towards the end of the week. I know we saw a good strength in palm oil as well on the Dalian exchange. I mean, you look at the soy products in general here wrapping up the month. What are your thoughts there? Because it feels like a lot of support there as well.
Well, I think, one of the things that I find interesting about all of this is that as we were breaking the soybeans on ideas that maybe the crop was a little bigger, the weather was getting a little nicer, which was the trade here just a week a week ago, essentially. Um, the crush margins were still very strong. Okay, and now we're seeing as soybeans go higher, we're seeing the products, essentially keeping up and doing a good job at maintaining a healthy crush margin for the processor. Um, I think it's interesting that you're getting this type of action in meal because our domestic crush has been fairly strong, but there are concerns about availability of meal out of Argentina. They are the largest exporter, and obviously, even as we look ahead and start thinking not just about U.S. production, but about production in South America, um, we're still staring at a La Nina that seems to be going into its third year, and that has had impacts on South American production here to some degree each of the last couple of years. It definitely has traders nervous, and of course, when that happens, sometimes the cash markets reach for what they know is available, and that's receipts off the Chicago Board of Trade, and we've been seeing that type of activity this week.
Kent, let's take a look at the corn market. We've seen this scenario a couple times this week. We saw it to wrap things up was that, beans were hot, moving to the upside. Wheat found pressure, move lower. Corn kind of got itself caught in the middle, didn't
Yeah.
know which way to go, follow beans or follow wheat. And that seemed to be the case here today. When you look at this corn market, what are your thoughts there as we turn the calendar to August?
Well, a couple of things. First of all, I feel as though the break that we had recently brought us down into an area that probably represented some value to the end user. As markets were breaking, we were still seeing margin in ethanol. We're still seeing adding margin into hogs, still reasonable margin in cattle as well, and maybe stimulated a little bit of new crop export business. Our old crop export sales are weak. We all know that, but we've sold a very high percentage of what the USDA already has in its old crop balance sheet. So it really doesn't matter that much that we've slowed down old crop exports. Um, I felt like we were in a value area, and you know, I think we stimulated a little bit of demand. Now, I think a lot of last week's break also was predicated on the idea that we were going to somehow magically be able to start exporting a lot of grain out of the Ukraine. And we had a fairly flashy signing. It looked really good, like maybe something good was going to happen, and we were going to be able to get some grain out of the Ukraine. Primarily to get wheat out to help Africa and some of the poorer nations deal with potential for famine. Unfortunately, as that ink barely dried, we had a missile attack on Odessa last Saturday morning, and that really dumped an awful lot of cold water on this idea that we're going to be able to get a lot of grain out of the Ukraine. And since that time, these weather forecasts look hotter. And while I think the corn is far enough along and in certainly better condition to weather these next couple of weeks, it's still going to have some impact on grain fill. And grain fill ultimately impacts yield. And if we're really going to be hot and dry for the next, 2 to 4 weeks, I can't help but think that it's going to have some impact. So we were caught between the lower wheat today. And the thing that we got to remember about the wheat market is it's just so thin right now. It is very thinly traded. It trades rumors very readily. So if by chance today there was some rumors that maybe the Ukrainian agreement isn't dead, and maybe there were still going to be some ships of some new crop Ukrainian wheat that we're going to manage to get to the marketplace. I can certainly see that pulling down on corn. I do think that we need to take all of these rumors out of Ukraine with a bit of a grain of salt, because the The difficulty at getting execution out of Ukraine right now is just really difficult. I can't imagine the cost of insurance. I
Hmm.
think it has to be extraordinarily high if it can be gotten at all. The ability to get crews to work on ships that are going to have to navigate mines, some of which are anchored, some of which are floating. Um, taking extraordinary risk. For the damage of those ships and for the lives of those crewmen. It just doesn't feel like it's going to be able to happen very easily. And of course, then there's a strategic component to that as well, and that is if Ukraine is able to guide ships out of Odessa, for example, you're essentially going to provide a roadmap for the Russian Navy to be able to get in,
Hmm.
and I don't think they want that to happen. So, for all those reasons, I think that we have to be a little skeptical about just how much we're going to be able to get exported out of there while we're in the midst of hostilities still ongoing.
Well, and on top of everything going on with the Ukraine and factoring into the wheat markets, as you mentioned, I know this week we had the spring wheat tour across the northern plains,
Yep.
finding pretty good yields. So I think
Yeah.
that was a weight on the wheat markets as well to wrap up the week, Kent.
Yeah, I agree with that. They did find good prospects up there. Uh, I tend to believe that these are things that oftentimes are known. I don't know that we're surprised about good conditions. Obviously, we have a fairly sizable client base in North Dakota, and we talk with those growers, and they've been telling us for a long time now that things look mostly pretty good up there. There are a few areas that might be struggling a little bit with excess water in some areas, and the lateness of how they got that crop planted, of course. But in general, we think it's going to be a good crop, good yield. We need good yields. We need good yields in corn and soybeans as well, because the truth is we're tight enough right now in the world that the world needs wheat, the world needs corn, the world needs soybeans.
Well, Kent, I want to make sure we have time for the protein sector here today. Cattle and hogs, pretty good finish to the week. This hog complex, especially, I've used the term a few times this week that August hog contracts like a freight train. It feels like it's a freight train running downhill. Just so much momentum in
Yep.
that front month hog contract right now. It seems to be the driver to the upside, Kent.
Yeah, I think so. And when you start talking about uh, a resumption of a hotter, drier forecast, your mind immediately wonders, well, is that going to have some impact on our protein production, rate of gain, and whether or not these animals are ultimately going to have a hard time keeping pounds on, and that of course impacts production, and that's part of what I think is our driver. We've also just seen, fairly consistently over the last number of months, packers having a hard time, filling their projected kill levels and having a hard time getting their hands on pigs, and it just has indicated on a fairly consistent basis that there might not be as many hogs out there as we thought there were. Um, that's in the aftermath of what was a pretty tough winter with disease pressure and the like, and it just seems to have a really long tail in terms of how it's impacting the number of hogs available to the marketplace.
And in the cattle market as well, I think some of the same factors there. But with cattle, it seems a lot of people I talk to are still friendly cattle moving to say the fourth quarter, but we're
Yep.
still waiting for some of those supplies to contract. It feels like in this cattle market, but yet
Yeah.
decent strength to wrap up the month.
Yeah. And you hear a lot of talk about, well, certainly about pasture conditions in the southeast or the southwest. I'm sorry. That's certainly an issue. I have cattle clients in Nebraska and Kansas that are really struggling with the availability and quality of grass to put those cattle out on. So that's had an impact. We've obviously seen placements into feedlots up as a result. Um, and you know, there's a lot of talk that there is some liquidation that could be ongoing, and that's going to show up in cattle numbers going forward. And as a result, yes, there is a fairly bullish bias that has been in the market. And yet, if you look at the charts, you see an awful lot of sideways price action, right? We go challenge the highs and then we set back again. And you know, we have relatively expensive cattle. Let's be fair, we do, but we have a price that's good enough to absorb some pretty high feed costs, because our margin calculations are still, reasonably decent as you look out the curve. Um, so all of those things kind of tell you, yeah, we may have a little bit more room, but it also tells me that maybe we're not going to get the liquidation that some people think we're going to get, unless it's driven by drought, and of course that's where the support from the weather this week sort of kicks in here again.
Ken, we got a couple minutes real quick. Outside markets, I know there's a lot there, whether we're talking stock
Yeah.
market, monetary, energies, etc. We saw a second straight quarter of negative GDP growth here this week. We got the Fed news, which was as expected. Any thoughts with the outside markets and their impact on the ag commodities here as we wrap up the month?
Yeah, well, certainly there's a couple of things that are happening. First of all, the interest rate hike, as you mentioned, as expected, as anticipated. What's more interesting were the comments from Fed Chairman Powell, which tended to be fairly dovish relative to the second straight month of a 3/4 point interest rate hike. Essentially, they are realizing and acknowledging that there are parts of the economy that are in fact starting to slow down already, and you can see it in housing, and you can see it in a few other areas of the economy. He mentioned amount of money being spent, or the amount of food being consumed is being impacted by higher food prices. So it tells the marketplace that while the Fed is tightening, that it's already looking past to the point where it isn't going to tighten as aggressively. And if it turns out that we only end up at 3 or 3.5% with an interest rate, and that we then pause, I think the marketplace is okay and comfortable with that, and that's why you're seeing the stock market recover to the extent that it has. It essentially broke out last week to the upside ahead of the Fed meeting, and has obviously accelerated higher since that time. If we just have a period of steady but somewhat higher interest rates at a level in that 3% plus or minus area, I think people think that would be okay and probably reasonable for the situation we're in.
Well, Kent, great stuff as always. Any final thoughts? Any advice you have for producers here, real quick, maybe before we wrap things up as we move into August?
Yeah, well, clearly we've had a really good week, adding 60 or 70 cents to corn, adding $1.50 to new crop soybeans, plus or minus. I think that's a place where if you're a little behind in your marketing, you may want to take a look at making sure that you get yourself caught up. We pretty much have half this new crop marketed. We've been on pause here on this break, and depending on how the weather forecasts play out from here, we're going to be pretty quick to add if we start to see any break in the weather in terms of high temperatures or any increased moisture in the models.
Kent, I know as well, quick plug, you're going to be at Farm Fest in Minnesota next week speaking. You want to mention that as well for us real quick?
Well, yeah, I'm going to talk about some of the market disruptors that we've been looking at here as of late. So clearly the war has been a major disruptor to trade flows and had an impact on price. We're going to take a look at some of this outside market activity as well, the inflation that we've seen and the increased interest rates, and talk about that and its impact on our markets. And then finally, I'm going to talk a little bit about some of the governmental things that have come down the pike, whether it be our state mandates around renewable diesel and the impact that's had. Also, some of the water issues and the fertilizer issues that we've seen. There's an awful lot going on there in government regulation. All of them can be disruptive to some degree in terms of normal farming practice, and we're going to discuss those and the impact that those things have had on our markets.
Well, fantastic. If folks are going to be at Farm Fest next week in Minnesota, definitely stop and listen to Kent's presentation. And I know if folks want to learn more and maybe if they have some questions and need some advice with their marketing, chshedging.com, a great place to start. Kent, always appreciate the time, sir. Thanks for joining us. Have a great one. We'll talk to you soon.
Thank you, Jesse. Appreciate your having me on the program.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.